for a really, really long time. We're talking about tax planning, tax strategy, the high level stuff that makes us high level players in this game. Really excited about it. And I've got David and Garrick, who we call Reeves. You may mention Garrick or Reeves, either two. He'll respond. And David, hey fellas, how you doing today?
Doing well, doing
Awesome.
really well.
Awesome.
Thanks.
Hey,
Thanks.
all right.
Beer.
Very good, very good. I was just telling you guys before we started recording here, I had a story that I wanted to jump into. Today, I wanted to talk a little bit about real estate professional and how that affects us in taxes. And I've been hearing this a lot lately, and I've been seeing it a lot on social media. But what made me think about that is I call it the red car syndrome. And you've probably have experienced this before when you maybe get this nice new car and you think, oh, nobody's got this. It took me so long to find it, and it's got this color leather and this color outside, and everything is just beautiful. And then as soon as you get in that car and you start driving down the street, guess what? You start seeing it everywhere, right? So all of a sudden, everybody else has got the same car that you have. That's why I call it the red car syndrome. I never see it until I have it. I was thinking about that this year with the real estate professional aspect. I see it everywhere. Like I'm seeing everybody talk about this. It's a lot has to do with what I do as a profession, being in real estate as well. But I'm sure you guys see this a lot, right? Real estate professional. If you could kind of just help me understand from just kind of like a beginner's approach to this, when we're thinking about tax and tax benefits of real estate, there's this thing that pops up that's called real estate professional, REP. So just break this down to me just for a little bit on an easy explanation of this. What do they say, the layman's term of a real estate professional?
Yeah, so real estate professional is basically a designation for a tax filing. And if you file as a real estate professional, there's a couple of rules around it to be able to even qualify. But essentially what you can do is there's an ample amount of tax mitigation that comes along with that. You can actually do a lot more than other tax strategies can, because you can even impact W-2 income on other ends. And so that's one of the big things.
Very cool.
But yeah, there's some certain restrictions or regulations on whether you qualify for a real estate professional, but basically you can offset taxes that you otherwise wouldn't be able to offset through the activities that you do as a real estate professional.
It's extremely important to understand that you're going to be hit with taxes one way or another. So the more that you focus on what opportunities sit in front of you proactively, so get on the front end of those strategies. And it's instead of waiting till they show up and you get to the end of the year and you're wishing and hoping you had these conversations with a professional. So it's extremely important to take a proactive approach to that and do some research on what can I start to implement. So for some of the people we talk to that are in real estate, we're looking at things more than just your typical standard mileage and the typical things you might want to write off. So you want to take a deeper look into what's available to you. We can talk about that more, but sorry, go ahead, Brad.
Yeah, no, that makes perfect sense. Being proactive on this thing. I think getting the knowledge is a great way to be proactive, right? Instead of responsive or reactive, you say. Reeves, a little bit more on this. Say it's a label, basically, and there are certain things that we have to do to hit this. For me, I have no concern with it, fellas, because guess what I do 24/7, 365 days a year, real estate. Right. I am clearly a real estate professional. But how about, I know a lot of people, physicians, other entrepreneurs that I know, they use real estate to offset income. So what do I have to do to classify as a real estate professional?
So the qualifications to be able to classify and actually file as a real estate professional, there's kind of two designations, right? You have to be at least 50% of your time has to be spent in real estate related activities. Now that does not include like researching properties and those kinds of things, unless it is like specifically like your job to do something like that, or that's your title. But it is real estate related activity. So real estate management, it's actively investing and participating in the acquisitions of the real estate, that kind of thing. So it's either 50% of your time or 750 hours per year to be able to qualify for a real estate professional designation on your taxes.
Okay. And how are people tracking this? When I say, okay, 50% of my time or 750 hours, how am I supposed to track this? And, is it like a spreadsheet you enter it into when you're doing taxes? Or tell me a little bit about that.
Oh, yeah. I think it would be, one of the things that we do when we're working with professionals, anytime they're trying to write something off, is to document early and often. And make sure that you have some sort of tracking method to it. And you'd be surprised what constitutes as well. So any sort of meetings or related work to that job can constitute under that. So if you're going to drive to an appointment, if you're going to meet with even somebody who's not directly a client, but maybe they're in industry with you and they do the things that you do. So like this sort of meeting right now, we're not selling a home, but we're presently talking about this. This would constitute as your real estate professional hours. So it's extremely important to put all those collectively together. And I would use a tracking system. We use documents for our clients so that they can easily just mark by day what they're doing and as they're doing it. I would imagine there's probably some great apps out there as well that you could probably use to track your time and your hours also.
Apps. I'm thinking, if our clients are physicians, if I'm sitting as a physician, I don't have the time to do certain things, but it sounds like in order to take full benefit of a real estate professional, you have to track this stuff.
You do. Yes.
Yep.
Yeah. Because if it ever got audited, they're going to want to know that the time was actually spent where you said it was spent. Right. And so you have to have whatever documentation it's specifically those hours. You have to be able to prove either one of those two things, that over 50% of your time, or at least 50% of your time, your working professional time is spent in real estate related activities, or 750 hours. The benefit of this too, though, is even if your spouse qualifies for this, that opens up other doors as well. So if your spouse, as a physician, maybe you don't have time to do the real estate management, the rental management, all that kind of stuff. I look at all of the real estate related activities. If your spouse does and takes that on as a priority and role, and they qualify over for 50% of their basically work day or work time throughout the year.
If they're only spending 20 hours a day, if I'm a physician, my wife takes care of the kids, other stuff around the house, that kind of thing, or if a lady is a physician and her husband takes care of the kids and stuff around the house, they're only working 20 hours a week. If they're doing 11 hours a week at real estate, that they would qualify.
Mm-hmm. Yep.
Yeah.
Wow. Okay, that helps out a lot. So what is the benefit of the rep of the REP versus not being it? So if I have a single family residential rental property, and I am using straight line deduction on this thing, and do I need to be a real estate professional in order to offset that passive income?
So if you've already got passive income coming in, it does still help, because there's still tax advantage there. But where it makes the biggest impact is if you have other money coming in through any type of W-2, if you pay yourself a salary through your business, if you or spouse are employed, you can actually offset not only your income and the income through the real estate related activities and those kinds of things, and write off a lot more through there. But you can also offset W-2 income. With a typical business, you cannot do that. You can only offset the dollars that are coming in through that business. That's why a real estate professional license, or not license, a real estate professional designation rather, is such a cool strategy, because there's no other strategy out there where you can actually offset the W-2 side of things, other than the traditional, hey, I got tax credits from having a kid, or those kinds of things. So,
well, and think of it this way, guys. So out of all the doctors out there, you physicians, there's a percentage of you that own and operate a business, and there's a percentage of you that are looking at this as I work, I may eventually own a business, I may never own a business. So when we talk about offsetting that W-2 income, you have to take in consideration the magnitude that that has. If your W-2 income is in the 6-figure range or even 7-figure, which is a little bit more rare, we're talking about like take-home dollars. The reality is that anything you could do to mitigate that, because you may have somebody staying at home, whether it's the husband or the wife staying at home, that is not putting in those hours because you don't need the second income. So to mitigate some of that is vital. You're going to get so much more tax opportunity when you're looking at the real estate professional designation and the things that go along with that. If you're looking at, say, a $200,000 or $400,000 salary coming in, anything you could do to mitigate that's going to be great. So again, proactive, constant documentation is going to be great.
Yeah, that is key.
And if
and
I know
like you were
we work with a lot. Sorry, go ahead. Go ahead.
I was just going to reiterate what you were saying, Brent, is that the other benefit of being a real estate professional is that you can on passive losses. So if you do have passive losses through rental real estate, that kind of thing, you can actually turn those into deductible losses and offset other income. That's how that works. And that's why you can offset W-2 income. You can offset a lot of other active types of income, which has a much bigger tax liability on it.
So we look at the straight line deduction. I mean, if you're straight line deduction, you can just basically write off the passive. But where we get these bigger bubbles of depreciation, when we're taking the benefits of cost segregation, where we're accelerating depreciation, right? Where this bubble depreciation comes in, that's bigger than our passive, and then we can carry that over to our active income. So I know that you got to cut out of here a little earlier here. One thing I want to throw at you is what if, I work with a lot of physicians who both husband and wife are physicians, right? Mm-hmm. So they are both have big requirements on their time. So if I've got to thinking, what if like the mastermind stuff, we invest in ourselves, right? The S&P versus the SME, the skills in me is what I'm investing in. And we have these fees. We're working with consultants. Say I pay $100,000 fee to a consultant or a mastermind. Can I use that as a business expense to offset my active income?
You can use it as a business expense, yes. But it's not gonna offset active income unless you are a real estate professional. It will offset, and basically it'll offset any income coming in through the business. If it's more than the liability, so let's say you owe, just for easy numbers, $10,000 in taxes, and through that deduction, you actually have a deduction of $20,000. Great. Well, you can actually do a carryover. So you can carry that into future years. Mm-hmm. It does have a limit, 20 years, but you can carry that into future years. But if you just have a business, you still can deduct some of those things, just not quite to the extent or the ability of being able to do it as a real estate professional.
In that consulting or mastermind type fee, if that was related to the business, if the physician owns the business and that cost directly happens inside of their active income business, then we could offset the active income business directly.
Yes, correct. Yep.
Correct.
That's interesting. That's an interesting piece right there. And then I know you got to run out of here, Reeves, so just feel free to bow out anytime.
Perfect. I appreciate you guys.
Active versus passive. Take it easy, Reeves. So, David, thanks. Active versus passive on this. Have a good day, man. When I'm hearing something about a way that we could offset with short-term rentals as opposed to long-term rentals, where we wouldn't have to be a real estate professional, but we can use these short-term rentals to offset our active income. Have you heard anything about that particular piece of the code?
Yeah, well, I think the thing to look at is whether it's short-term or long-term, you're still running a business, right? You're just trying to decide how you want to spend your time. So if it feels like a headache to have a long-term renter, And it's easier to have somebody manage these properties and go in and just keep those things flowing while you do your job every day. As a physician, that's important. You're just looking at it at a deeper level and valuing your time and saying, how do I want to spend my time? So it still constitutes as something that you can justify and say, I'm still operating and running a business. And to Reese's earlier point, as money's flowing through the business, that's what you're really trying to offset and mitigate. Is I want to proactively show that I have, yes, I'm spending money, even though I'm making it, whether I'm hiring a professional or I have to renovate or change things about that property, all of that goes and constitutes as mitigation against your taxes in your business. The difference is you just can't have it so skewed. Like the tax code, they don't want to see that you have a business that's just only operating for the purposes of a loss. Is important to note as well. And so they're always monitoring to see, are you owning this business just to operate at a loss? For most people, though, they're not looking for that. They want to actually see some revenues and profitability come in. So that's usually not a concern.
That's very interesting there, David. So operate as a loss. And if I'm running passive income portfolio that's doing $100,000 a year on income, passive income portfolio, but I run maybe a couple of those properties, run a cost seg on that, and I have a massive deduction that I'm putting through. So if my deductions are exceeding my actual income, that business is showing as a loss. And the reason why I would do that is if I'm a real estate professional, I can then offset my active income. But what I just heard you say is we don't want to set up a system where one business is always running a loss, because the government doesn't like to see
the sole
that.
purpose, you don't want it to show as a loss. It doesn't mean that it can't show as a benefit from passive to active income. It just means that the sole purpose of setting up this business is to operate as a loss for you. You have to really be looking at the value of what you're investing into, right? So as Garrett mentioned before, you do have a certain amount, and there's certain qualifications of what you can do for carryover from year to year. And he kind of dials into the focus of what those exact numbers are. That's where his skill set is. But the focus that we're looking at is, this is a lot of times, I think the purpose of coming into real estate for a lot of these professionals is they're asking themselves, right now, I work as a physician who I'm in an hour for dollar exchange. So they're often looking for something else in order to make their money, or a place to direct their money, because there's a time exchange. It's where all their knowledge is, all their skill, all their talent is in being a physician. But it takes a lot of their time, a lot of their energy, a lot of their resources. So real estate is an amazing opportunity to find a balance between, can I still make some money? Can I offset a little bit of my taxes and maximize where I'm not finding myself in an hour for dollar exchange. So in this passive income approach, really, at least for most of the doctors we talk to and most of the physicians we talk to, they're doing it to actually make money in some way, shape, or form, because they don't want to feel handcuffed to their job. They may sell their practice down the road. They may not. But in the end, they want to feed their legacy, right? With continual opportunity and money that supports their future life. So they don't have to be in the hour for dollar exchange when they're in their 60s or 70s or even later 50s. So,
yeah, a couple of points there really hit me. The carryover thing I want to come back to. And I know Reeves had mentioned, not taking it all this year, but kicking it down the road a little bit. And I think it was 20 years where we could kick these amounts down the road. The best part about making money is keeping it, right? To not have to pay taxes on it, not lose it. Now, when I hear companies talk about, $1 million in revenue, well, what does that mean? How much does it cost to get you there, right? So there's this idea that if you're going to be making money, then you're going to be paying taxes on it. And David, I'm kind of hitting this because I remember as an entrepreneur, I've started many, many companies, right? And going through that first what I call learn and burn, where I'm growing, it's easy to produce losses in those early years, right? But that reality of David, when you turn the corner, it gives me goosebumps thinking about it. You turn the corner and you're actually making money. And, you take something where it's six figures making money, right? And all of a
Yeah.
sudden there's, whoa, wait a second. Here's that reactive thing you're talking about, right? Now there's taxes. And I remember just this sickness in my gut, this huge thing. Yes, we're at six figures. This is awesome. And then the huge like stomach kick of being liable for the taxes in that. But when it comes down to it, David, it's if you're making money, then you're paying taxes, right? One way or the other,
Yeah.
you've got to pay these taxes. And I heard you talk about a lot being proactive versus reactive, and I want to maybe wrap up our conversation with that. How can we be proactive with this real estate professional approach? But before getting there, I'm just hanging up on this cost seg idea. And for those of the listeners who don't know, the cost segregation is a strategy that we use to accelerate the depreciation of a rental property, right? So instead of stretching it out 27 and a half years for residential, we can skinny this thing down to what you probably know better than that, like 1, 5, 7, or 10. Is that correct?
Yeah, you can cut it down significantly. You're right in the window. So
Yep.
So think of it in this way, guys. Cost segregation. Sorry, you had a question.
No, go right ahead. Go. I was just explaining that process, what that is, because if I have this strategy to implement these bigger bubbles of depreciation and not stretch it out 27 and a half years, maybe I can use cost seg to bump it up so I'm not paying any taxes on any of the passive income that I have. Even if I'm not a real estate professional, I'm a physician, my wife is a physician, or you're an entrepreneur and your significant other does a full-time job as well too. You don't have the time to be a real estate professional. What are some strategies that I can use to still offset as much as possible? And using this cost seg to depreciate everything we can, so we're not paying taxes on the income, and then using that carryover strategy then too to kick it to next year and then next year, right? Or say we just stretch this
Absolutely.
out for 5 years or 10 years, so we're not paying taxes on this passive income. And you're going to talk a little bit more about the cost seg thing there.
Yeah. We'll hit a little bit of all of these, and feel free to keep me on track. I want to make sure the listeners get what they're looking for.
Okay.
So think of it in this way, guys. You have to remember, is money worth, first and foremost, worth more now or worth more later? Really, really important. Think about that for just a moment. If you had $10,000 today, is it worth more now or is it worth more later? If you had $10,000 30 years ago, right? Is it worth more 30 years ago or worth more 30 years from now or worth more today? So money's always worth more now than it will be later, is the simple answer. That's extremely important to know. And this is why cost segregation is a good conversation to have. So why do we look at this as a strategy? We look at it because over time, if we're depreciating this asset that has a significant value associated with it over a long period of time, that means that we're stretching it out over, we're losing dollars because we're stretching out over so long. If we were to take the total loss or as much of that loss and condense it and just compress it into a shorter window, we're actually getting the value of those dollars earlier on. Why does that matter? If money's worth more now than it is later, I can redirect those dollars that I'm saving. I can put those dollars into interest-bearing opportunities. I could put those dollars into other investments and grow my portfolio. I can do other things with that money, right? So whether it be $10,000, $100,000, or $1 million is less relevant because it's all relative, right? It's relative. So if I can take that money and condense it and mitigate early on, I now can direct. So this also complements a little bit of what we talk about being proactive. So if we're talking about the proactive side of things now, what are some things that I can do to be proactive in my tax filing as a physician? What can I do to be proactive in mitigating taxes or just looking at even investment opportunities? One, if your skill set is in what you do as a physician, so whether you're a dentist or a chiropractor, emergency care, doesn't matter what it is. Remember, that is your primary source of income, and that is where your knowledge is. So if you've made all your money in this area where you have knowledge, then to place it in an area where you might have limited knowledge, like real estate may not be one, full-time for you, maybe a part-time thing, and two, it may not be where all your knowledge is, but you may be willing to do a lot of research. So the very first thing I would say in terms of proactive, make sure you have the proper professionals on your team. They can help you navigate these areas, help you understand what you're doing and how can you be as powerful as you are in as a physician and as a doctor, how can you be that powerful also in the real estate side? That'd be the first thing. As you know, if you're already on this channel, you probably know somebody. I'm not pointing any fingers, but you probably know someone that can help you out. Brett and the team at PWS is phenomenal.
Yeah, absolutely.
Second thing to know is...
go ahead.
Go ahead. I was going to say, making sure you have the right finance. Yeah, second thing, I would say making sure you understand that if you have the right professionals on the operational side and the strategic side of how to get real estate together, remember there's one common thread between all of this, and that's your money. One common thread is your money. So whether you're making money in real estate, you're making money as a physician, or you're making money in something, some wild investment that you threw money at, the constant between all of that is the financial side of it. So have some financial players that work strategically and, most importantly, comprehensively. So that means that they need to understand that all these elements of your life are working together. Your taxes, your cash flow, your investments, your insurance, your asset protection, your corporate structure, the list goes on. Why? Because as an owner of a firm myself, and as you guys understand, and we've worked with people that are generating millions of dollars a year in personal income, let alone millions of dollars a year in revenue, it's extremely important to understand that your job and your skill set is to operate in what you love most, enjoying your life, creating value through what you love doing, whether that be real estate or as a doctor, and spending time with your family. So go make an impact where you love making an impact. Let the people who want to go read the 1,000-page tax books and the people who want to understand all these really complex areas, let them do and put the energy into all the things you might need to know about finance for your sake. And all you need to do is become a professional of what you know and rely on professionals that understand what they know. So think of it in this way. If there's 1,000 pages to a tax book or 10,000 pages to a tax code, and only 5% of them apply to you, let the professional be the expert of the 10,000 pages so that they can give you the 5 pages or the 10 pages that apply to you. Now you can become a professional of what you do. And so those are the two key pieces. And then document, obviously.
Yeah. That makes me think, David, when you're saying impact, I've heard you say it a couple of times. And when I first introduced you guys today, capital impact, we had a conversation a few weeks ago, and it hit me. It was off camera. We weren't being recorded anywhere, and I don't know if we could provoke or invoke that same kind of passion. I know you're a very passionate person. You're very passionate about helping people keep their money and doing it proactively. Can you tell me a little bit about capital impact right now, what that means to you, the name-wise, and how you're able to help people in that regard?
Absolutely. So we come from a family office background, my partners and I. And so if you don't know what a family office, that essentially means that we have worked in a comprehensive approach for business owners, trying to find ways to mitigate their tax liability, cash flow, various areas of their finances, their protections, and all of this. And fundamentally, what we were realizing is most people love to talk about finance and they love to talk about the money, but they forget about the person they're working with oftentimes. If you guys have ever felt this way at all, where you've had a professional who they know all the things that need to be known, but you just don't feel like they know you or are supporting you in a way that moves the needle, or that feels like there's a level of care about you and your family and your business, we realize that and realize we have to find a different approach to how we're going to show up for clients. So let's talk about what capital impact means to me, at least. And my partners may have their own definition to it, but capital is all the different areas that we have capital. We have intellectual capital in our lives, what we know. We have social capital, who we know. We have relationship capital, meaning, relationship capital is more who we know. Social capital is more our impact socially. We have intellectual capital. We have capital coming through our business. We have assets. All these forms of capital are what kind of feed our life, right? They keep our life going. And then impact is about results. We lead with results. So in other words, what we want to do for our clients is this. We want to make sure that we're looking at every facet of capital that addresses your life. And we want to make sure that you're getting results in every single one. and we lead with those results. So when someone works with us, not that you guys don't already have professionals and shouldn't already be leaning into your professionals, but what you should be looking for from your professionals is this. Are they being proactive as well with my life, with my finances, with my care? Are they taking the time to educate me early on? Are they taking the time to show me results before asking for a paycheck from me? And so for me, I don't know how to invoke that emotion coming from it from before, but I do know this. You'll know when somebody cares and when it matters. And this isn't just about feelings. This is about making sure that the thing you care about most is not being sacrificed for someone who's just trying to get a paycheck. And so for us, Capital Impact is just that. How can we make an impact and get results in the areas that affect your life?
Big stuff, big stuff. And I know I've heard you say before also, David, that you are going to care more about your money. You have to be the one that cares more about your money than anybody else. And when you lead into relationships like this, when you care about your money, then the impact is exponential then at that point.
Absolutely.
And, the other thing that makes me think of too, David, is you mentioned the different types of capital. And we had recently written a book called How to Get Rich as a Doctor. And inside of there, I remember writing a section on building your team and what that looks like. And in there, similar to what you're saying here, David, it was leverage. And in my mind, I could see it as leveraged capital, where there's more than one kind of capital, just like you're saying, in the capital impact piece that you just spoke of. So leveraging those different types of capital, and then the impact of it is massive. Absolutely. Very cool stuff. You did a great job, man. I think it definitely shines through your passion in it for sure.
No, it's fun. I enjoy what I do. And it's most fun when you see those light bulbs come on for individuals. When you know that they've been working and putting 10, 15 years into something, and you start to realize like all that effort is for something. It's just getting aligned with somebody, like get aligned with people that you feel like have your best interest. And I do love what you bring. You recycle that back of just being mindful of no one can care about your life, your family, your finances, or your business more than you. And those that tell you that they do, listen to me, have an alternative agenda, because no one can care more than you about your life. Like they have an alternative agenda. So run as fast as you can. Like the reality is at best they can do is care as much as you. But if they're being honest with you, they'll always tell you that it sits in your lap to own that. And if you can sit in that seat, you're going to find out that it's easier than you realize. Like it just, I see that the people that make the most money that I've worked with, like it just seems carefree. It seems easy. It doesn't mean they don't have problems. It just means that they have an ecosystem that allows them to feel like no matter what comes at my life, no matter what's coming from any angle, I feel like I have the proper people and systems in place that allow me to just feel like I can weather whatever storm comes my way. It doesn't mean they're avoiding storms. It means that they have the proper infrastructure to handle those storms. And so think of that as your external environment. Okay. How do I build my external environment? The next piece is this, and this is one I care about personally, is your internal environment. And it sounds a little odd to talk about internal environment. I know we're probably at time, but I want to just highlight this for just a moment. Your internal environment is feeling centered within yourself as an entrepreneur. And I'm not hugging trees here. We see this stuff all the time. How important is it to understand who you are, understand what your needs are? And it's beyond just taking ownership of things and working hard. It's not just the time you put into something. It's feeling like you're aligned as an individual, because we are often our worst enemy. We're often the person who judges ourselves the most. And are we taking the time for, again, not tree hugging here, but being honest? Are we taking the time for meditation, for quality conversations with our spouse and our kids? Taking the time to really know that our business is a reflection of who we are as a person, not just out there to go generate dollars in revenue. Our investments are a reflection of who we are and what we represent. And because what you'll notice is when you're in alignment in your internal environment and your external environment has the systems and processes, it almost doesn't matter what happens out there in the world. And you become a beacon that people start to, say, I feel like I can do that too. You know, you see those celebrities and those extremely successful people and you're like, that feels possible. Like, so just make it possible. You know, put the time into yourself and the things that you care about. Anyway.
Yeah. Yeah. I mean, mindset is a huge piece. And in my professional journey of where I've been and where I'm at now, finding that piece of the solution or the service that you're providing, it has to be in 100% connection with who you are as a person. And I've said this multiple times in the past few weeks here. There's a book called The Power of Now. It's by Eckhart Tolle. And David, if you haven't read that book, I think it's a great book. Great book.
I haven't.
And also, read it, man. Read it. You're going to connect with it for sure. But the idea, even, and I've said it on making renovations, deciding what to fix and what quality to fix in the world of residential real estate. I've known a lot of investors. I know a lot of investors, and I've known them from both ends of the spectrum. From one side, which I call slumlords, which I don't like the strategy at all. And on the other side, it's the overdoers, right? And the world changed with Airbnbs where you can overdo and you can get paid to overdo. Yeah. But there's two huge pieces of that. And ultimately for us, David, when we have rentals, and when we have Airbnbs, you know, the Airbnbs will actually go and stay in them to make sure that we could, you know, bring our family there and feel comfortable. We align with our product. We align with our solution, our services, the value that we're bringing to the world. We're aligned 100% with that. So that hits me for sure. And it's a huge piece. So for the listeners out there, Real Estate Mogul MD is the podcast, and the company's back behind this. So we've got a company called Physician Wealth Systems, and we help by finding, acquiring, renovating, and managing residential real estate for physicians specifically. And we work directly with Capital Impact to do this responsibly too, to be proactive in this strategy. And the cool part to tie all of this in, David, is that we align. We align 100%, I feel, with each other and the service that we're providing and the truth, the transparency. Everybody can find our contact information on the website, physicianwealthsystem.com. We can actually reach out to Capital Impact is actually as a resource on our website as well too, so everybody can find us and connect with us. Before we wrap up here, David, just circling back to that proactive approach, and we started by talking about real estate professionals, and the time piece is big on this. So just kind of summarize where we're going. If I want to be proactive, I care about my money. I know you care about your money, and I care as much as other people care about their money too. I can only help them. You can only help them as much as they care. Well, let's help them a little bit. If they have the opportunity to be a real estate professional, there are massive benefits to this. We talked about 50% of their time or 750 hours have to be documented and proven on real estate. We talked about a multitude of ways that time could qualify as real estate. And it's more than what you think, like this talk, this dinner, traveling here, all these kind of things could constitute as that time. We talked about sometimes the spouse, the significant other is a really good approach because it's 50% of the time. It doesn't have to be 750 hours, right? So if it's 50% of their time, that they as a couple could qualify. Big pieces. We also talked about document early and often, and I think that's huge. So if we're speaking directly to the physicians out there who have the ability to be a real estate professional or their significant other does, what are some exit notes here to walk them all the way with, to give them maybe a grasp at this is possible?
Yeah, I think the best thing to do is just ask yourself a few questions like, do I value my time? Because if you value your time and you feel like you're spending a lot of it in active income areas, it's important to look at passive options and options that maybe you can, again, build your ecosystem around. Another one is, do I value my legacy? And I know this is an odd question to ask so early on in the conversation, but I love to begin with the end. Meaning, how do I want my life to be looking in 5, 10, 15, 20 years from now? Who do I want to be spending it with? What do I want my day-to-day to feel like? So I think of my legacy as, first and foremost, legacy for me and the individual people I spend time with, and then legacy as in, what can I pass on? We often think legacy belongs to those who are 70, 80, and 90 years old. And the reality is that if you have a heart beating in your chest and you are actively working somewhere, doing something and helping and creating value somewhere, you have a legacy too. And it doesn't matter also either in dollar amount. So it doesn't mean if you're multimillionaire or you're just doing a few $100,000 a year. All of us have something to pass on. So begin with the end, I guess, is another one. Think of that, because if you begin with the end, you can be proactive. Another is build your ecosystem, both internally and externally. The more that you put the energy into making sure you have a good alignment and you're balanced out as an individual, I think it's really, really important. And the other one is this. I think a lot of people treat yourself with grace. There's a lot of motivation going on out there in the world. There's a lot of inspiration. There's a lot of people saying they do it all and have the ability, and everybody's showing what they're capable of, in snapshots and little clips like these videos and things. And everybody's life looks amazing. The reality is that sometimes we can put individual pressure on ourselves that we're not achieving at the level that we should or believe we would. Or maybe we overestimate what we can do in 1 or 2 years and underestimate what we can do in 5 or 10. So treat yourself with grace and understand that you have to give yourself credit for what you are doing well and respect and love that part of you, so that when you do go conquer money or go conquer real estate or conquer what you're doing as a physician, you can do that with a sense of being an example of all of us have our failures and successes, and that is part of the entire human experience. So enjoy your human experience, because it's worth every bit of it.
It's awesome, man. I want to give you a hug right now. We're across the United States from each other, but yeah.
No, you're back in my dad's alma mater and hometown. Michigan's a great place, and I'm so glad you're visiting.
Definitely.
I didn't mean to take finance.
Definitely across the United States, man.
This sweet place.
No, absolutely. I love. Yeah, we got a little bit of a delay here. It's kind of a little difficult.
I know. I'm sorry for the listeners, but I didn't mean it to take it to a tender place. Like, I think what it is that money honestly becomes the easy part. It's everywhere. And so for me, it's like we put so much emphasis on money around whether it be an investment or our job or all these different things. And it's because I think it's probably because most of us don't feel like we understand it. It feels confusing and it's difficult and it's overwhelming, or we do, but then it surprises us. So for me, it's like, I think the money's the easy part, to be honest. So I think that's why I lean toward getting back to the person, get back to that person. So sorry if that took off the experience for any listeners. Didn't mean that.
No, I think it's great, and I hope everybody enjoys hearing the real talk of it. And you touched briefly on, you see so much out there of what people want you to see. And I've spent time, and I've been behind cameras and on stage and all that kind of stuff. And oftentimes I'll take candids, and I'll take the candids of like recording with children. Oh my goodness, is one of the most difficult things in the world when you're doing recording, because you got to get into this, this smiley face kind of life that everybody's expecting to see, but it's not like that. It is not like that. It's like when you have guests come over and you say, I'm sorry, the house is such a mess, and you just spent the last 2 days cleaning it. You know what I mean? It's like there's not the real world. You don't see the real 100%. World. That's a huge piece. That's a huge piece, man. And just aligning with who you are. I always say, David, that money disappears. Money disappears when you're around people. When you have that direct connection, you're around the right people, money disappears. And I just keep hearing over and over again in my head, this real estate professional idea. Maybe it's not the right direction for you. Maybe you don't have to be the real estate professional in order to get maximum value out of the real estate passive world, right? Maybe it's just surrounding yourself with the right people and finding these avenues, strategies to take care of you, to have that impact on your capital, right? That's the difference.
Absolutely.
So maybe it's not that you're a real estate professional. If you've got the easy go-to where your significant other can qualify, hey, let's rock it out. We'll show you how to do this. This is document early and often, right? It's really easy, but it's not the end of the world if you're not a real estate professional. And then there's still a lot more value in.
Well, I was going to say, Brett, you're 100% right. I mean, think of the physicians we're talking to. I probably should have talked about this more, but I've worked with doctors for years, hundreds of doctors for years, and the greatest thing that they have going for them is they actually get an income. Most of them have an income that takes care of their life, and their wife or their husband, who's not doesn't have to demand that they work as much, right? So whoever's at home, doesn't matter, or if they're both working, doesn't matter either. But the point being is that for the most part, income's not the obstacle, I guess is the best way of putting it. Oftentimes, though, after they go through all their schooling of several years, they don't realize how much time they don't have available to them that they would have liked to have. They took all that time learning and all those hours put in, and it actually just amplified to more. Most doctors don't get a lot of their time, and the ones that do still might feel a lot of pressure to produce income. So there's pressure coming from somewhere. So it's probably good to acknowledge that we understand that. And so I think when you have pressure and you have all these different things, peace of mind is a really important thing to have, whether that comes from time or whether that comes from relieving pressure and increasing education or your access to the right resources. I always say, like, if oftentimes us and our goal are separated by knowing the right people and having the right resources. Simple as that. Just knowing the right people and having the right resources. And if that will help us fill that gap, because there's nothing I can say that these doctors haven't already read, learned, or heard. You won't hear me go down a deep tunnel of a strategy, unless we're working personally with you and going through and talking about what your personal needs are and what you're trying to accomplish, because strategies are just tools. You're building a legacy in your home, and in that home of your legacy has your business, your kids, your family, all these elements. So I can throw out 100 or 1,000 different strategies at somebody, but it's just a tool. If I keep waving a hammer to you and you already have one, what use does it have? We need to know how to put those tools to work on your plan. And that's what matters. So the clearer you are about you and the clearer you are about where you want to go, the easier it is to get those resources to help out so that you can
that's awesome.
Get that peace of mind.
Yeah. Waving the hammer around when you already have one, that makes sense. So maybe real estate professional doesn't make sense to you. I'm going to cram it down your throat. We don't need it.
No.
Yeah.
I'll say this. There's a lot of options to invest money into. And I love Brett being so, I mean, just listen to that. This is what Brett's skill set is. And instead of cramming it down somebody's throat, he just wants to share the education around it and say, hey, it's up to you to decide, right? It's up to you. Like, I'm merely a resource. Like, just listen to that tone. That you don't get that often enough, Brett. You know as much as I do. It's anybody can do it. Everybody can do it. Everybody should do it. And it's this big, banner that people want to slam in our face. And for you to take that approach is awesome. Look, this is what I'll say in working with business owners for the better part of a decade, and at very intense levels and very intimate levels, meaning I get to see all of their finances at the deepest level and in multiple areas. The best thing you can do is invest in yourself out of all options. And investing in yourself means that it could be education, it could be alternative investments, it could be your business. But again, remembering that alignment. So a lot of you have probably thought, I know I have, a lot of people have thought about real estate as an option. It is absolutely a viable option for most people. The difference is the reason why you see the big hitters and the ones who are just trying to play at some level is because they have you don't want to jump into something like this for a dream. You want to jump into this because it feels like an alignment. I do believe that real estate's a part of our portfolio. I do believe in the team that I'm hiring and working with. And I do believe like I'm willing to stay at one of my properties to make sure that it feels comfortable and is reflective of who we are. Because when someone comes to your place, if you have a property, you don't need to attract everybody. You need to attract the people that resonate with an extension of who you are, because it's a reflection of that, right? So there's plenty of like real estate. What I've loved about real estate is that it's a tangible, not going anywhere, right? We can all live in the metaverse, but the reality is we still need to go to a physical place. So real estate will always be around in some level. So it's a great investment opportunity. But I guess the thing is just you won't know until you take a step forward. And you won't know until you meet the right people and have the right conversations. So start having conversations.
Yeah, absolutely. And you talked about people and resources, and really finding that alignment. And if the listeners out there are, in alignment with the genuineness that I hear in your voice, David, and obviously I'm consider myself similar. Like I'm always transparent. I'm just telling you how I feel, and I want to share as much as possible. If someone wants to get a hold of you at Capital Impact, what would be the best way to connect with you and say, hey, is this something that aligns? And even if they already have, a team, an accountant, a CPA, a strategist, attorneys, all that stuff, that's okay. Get inside. When I say in real estate, you don't buy a house from the outside, right? You got to get inside and tour around it and see if you like it, see if you align. How could the listeners align with, see if they align with you and Capital Impact?
Absolutely. So I think the best thing to do is when you just have to look at your team and know that whether they're proactive or reactive, whether you've had them for a long or a short period of time, they're all just doing their job, right? And they may not be doing the job you need for them. They're all just doing their job and doing a job. So identify if you care about things like proactiveness and comprehensiveness, I'd say is one of the first things that matter to us, at least when we're working with somebody. Because we're not going to tell them to leave their team behind. We're going to let them know that it's extremely important to just give their team a shot at doing a good job, but we have plenty of resources to replace anybody that needs to be replaced if they're just not showing up. Right. So if you're looking to connect with us, understand that we're not here to point any fingers at you or your team. We're here to make sure that we fill in the gaps and to get things moving together and comprehensively so that they don't feel like they're sitting in their silos. If that from a mental side of it feels like is attractive to a person, then we're probably worth a call or a conversation. If that doesn't feel attractive to a person, then we're probably just go do your own research, go DIY it for a little bit, and then come find us. What I'll do, Brett, is I'm going to send you I could give out my number, but I don't know how many people this will go to, and I usually like doing that. But I want to give you a link that your listeners can automatically, if they're interested at all, we'll just give them a complimentary conversation. Anybody that's caught this, Perfect. Maybe we give it to the first 10. I'll let you pick the number or however many you decide. I'd be willing to actually just go look at someone's taxes for them and find out if there's some opportunity for them. Because if we can find a savings for them, that might make it easier for them. I call it the hidden value rebate. If you have hidden value rebates in your life, you might find out that it pays for services that you need to get going in your life. Oh, yeah. Like get into real estate, get into other investments. So I'll make sure I get you a link that you can jump into it, maybe like a QR code or something.
Hidden value rebate. I like that one, David. Hidden value rebate.
The dollars that are already there.
So what we'll do, David, is we have Capital Impact as a resource at physicianwealthsystems.com. It's all spelled out, physicianwealthsystems.com. And on there will be the resource. We'll make sure we get your guys' link up there. And it's just have that conversation to see if that alignment is there. And I've seen it myself. I've seen you guys pull these hidden value rebates out of here and totally fund these opportunities that we're looking at. Personally, I know we've worked with a client, both of us have worked with a client, and we've seen that 80K number come up, and it's like that's hidden.
Oh, yeah.
That's hidden inside of there. So it's
Yeah.
worth it. And what I love about the very first conversation that we've had with the whole team at Capital Impact, and I say this time and time again, is how well we've connected, how well we've gotten along, how everything aligns. And I think it just sums everything up today with that alignment. And if it works out, we'd love to see the listeners reach out to you and potentially even work with us at Physician Wealth Systems too. I really appreciate your time today, David. Awesome, man. It was a great chat.
Thank
I appreciate it.
Thank you so much, Brett. Enjoy, you guys.
Well, thanks for everybody.
Looking forward to more of these conversations.
Absolutely. Thanks for everybody giving a listen here on this episode of Real Estate Mogul MD. Check out the book, How to Get Rich as a Doctor. Tons of resources in there talking about taxes, acquisition, and the big one that we briefly touched on here today, David, and I still owe you a hug for that, is mindset. Physicians and a lot of people, myself through college as well too, we're taught specific trades, but we're not taught about mindset and what it takes and money in itself. So all these resources around, we talked about that, having the right resources and the right people around you. And this is where it's at. Absolutely. I appreciate it. You have a great day. All right, David?